Hello and welcome to the RANsquawk Weekly Wrap-Up video on Friday the 30th of September. So we're just going to take a moment to answer a couple of questions that have been sent into our desk. So the first question is to talk about the EFSF expansion. So the Eurozone has remained in the focus of the markets throughout this week, as it has done for the past few months here. And in terms of news flow this week, there's still a lot of the focus is on Greece. So Greece does have funding to last until around the end of this month, ahead of the G20 conference. So we have had the Troika in Athens, and things seem to have gone reasonably positively, although they haven't yet fully confirmed that Greece will get the next tranche of its bailout. And this decision does appear that it will be fully ratified by this G20 conference at the beginning of November. So there's a lot of emphasis on this, and that the Eurozone has to come up with a way to really stabilise these southern European states during this conference and come up with a real solution to their problems. So there was a G20 meeting last weekend, and there seems to be a real new impetus to come up with some kind of longer term solution to these problems. So one of the solutions was proposed by the US Treasury Secretary Geithner, and does seem to have been talked about by many of the Eurozone finance ministers, and that is the leveraging of the EFSF. So this would be to something around the 1.5 trillion euro mark, and should be enough to cater for all the Eurozone member states that are in trouble. So in terms of this, it would be largely backed by German taxpayer money. And in terms of the actual figure looking to be raised, it would be around about the 490 billion euro mark. So this week we have seen a series of votes from the Eurozone state parliaments on the expansion of the EFSF. So we have seen this week states such as the German lower and upper house both approving the expansion of the EFSF, and we've also seen today the Austrian government approve it as well. So in terms of notable states still to approve it, we have the Dutch scheduled to at least discuss it next week. There's no exact date for the vote, but it's expected to follow shortly after. So they're a fairly contentious state for this. And we also have the Slovakian government to vote on it as well. This is expected around mid-October. So both those two states, they are expected to pass it, but there's likely to be quite considerable opposition to its expansion. So our final question for the day really looks forward to next week. So we do have some fairly key risk events. As ever, the Eurozone will continue to be in focus in terms of those debt problems. We also have the US non-farm payrolls figure to look forward to as well, with jobs still firmly on the menu as the US does struggle for growth. Of note, it is worth considering the fact that the US final GDP reading for Q2 did show a bit of an uptick to 1.3% for that final figure. So a small amount of growth there, and there will be a lot of highlights on the US GDP figure for this month. So in terms of the Eurozone, the key figures to look for are both the ECB's rate decision and the Bank of England's rate decision as well. So in terms of the ECB, what was widely expected was for the ECB to cut their rates, currently standing at 1.5%. This was backed up by ECB's Novotny, who does say that an ECB rate cut would not be out of the question. It's also worth considering that it is ECB's Trichet's final press conference, so he's looking to go out on a swan song. However, we did see today the Eurozone CPI figure coming in at 3%, so that's much higher than the ECB's mandate inflation figure of 2%. So ECB's Trichet will be under some pressure to not cut the rates. However, the Eurozone does have a rather delicate problem of trying to imbalance an increasing inflation problem with that of the stagnated growth. So Eurozone growth does appear to be pretty stuck, and somehow the Eurozone states have to try and overcome this. So in light of all this information, most forecasters are expecting the rates to be kept on hold, but it's likely to be the conference that's going to have the real fireworks. So elsewhere, in terms of the BOE, they are expected to keep their rates on hold at 0.5%, as they have done for quite some considerable time now. However, the real discussion at the BOE is for them to enact further quantitative easing. So it's widely expected that they may well look for around 50 billion sterling in terms of QE, and they may possibly increase this even further, with growth still a real problem in the UK. And it does appear that the BOE's mandate on inflation is taking a bit of a backseat, and growth being the real priority of the Bank of England at the moment. So those are the two key things to look out for, both those decisions expected on Thursday. So that's about it for this weekly wrap. We hope you have a great weekend, and we'll bring you a full update of all that's going on in the global financial world on Monday.